In this video, I'm going to teach you how to do risk management in forex trading. When we talk about forex trading, the only way you can become a profitable trader is how you can manage your risk. It doesn't only happen in forex trading. If you are someone who own a business, the only way that business can grow is to learn how to manage that particular business. So this video is purposely for how to manage forex or manage risk in forex trading. So I have my laptop over here and I'm going to give you all the tutorials over here, and I'm going to jot everything over here for you to understand. I split all the steps in numbers. I have 1 up to almost 6 steps that you need to take in terms of managing risk in your trading. Now the first step is that make sure you always execute $1 or $2 of your account. For example, you deposit $100 in your account, then let's say you have $100 over here, $100 over here, then you should enter or execute 1 or 2% of your account, which means out of the $100 balance that you have, you need to execute just $1 or $2. The reason for this is that when you risk $1 or $2, you have enough funds reserved, and it will even give you the chance to pay attention to the charts, so that in your next move, or to give you enough confidence, or imagine that you even enter $2, you have enough fund reserved for the next action to be taken. So this is the main reason why you need to risk just 1% or 2% of your account. 1, it will make or reserve enough funds for the future trade. 2, it will make you read or get enough time to read the chart. This happens emotionally. Let's say, for example, you have just $200 in your account, and you use all the $200 or $100 to execute a trade, and all of a sudden the trade or the analysis doesn't go or doesn't work positively. The only thing that will happen is that you'll be heartbroken and you close the app. Do you understand me? Because it goes against your emotion. So you are going to close the app, and that whole day it will be a very, very, very bad mood for you. So when you go 1% or 2% of the account, you are going to have enough reserve fund. So it will be like you have enough reserve fund, and it will give you more confidence or more enthusiasm to do what? To take care or to take time and analyze the chart again. Do you understand me? These are the 2 main reasons why you need to risk only 2% or 1% of your account balance. The second one is stop loss. I hope you know this, SL. This is very, very important, and this is the most trending or the most famous risk management in forex trading. Stop loss, stop loss, stop loss. You have been hearing stop loss, stop loss. Now, this is one particular thing that you need to know about stop loss that even your mentors don't want to be teaching you, and many people don't want to learn about it. Now, when we talk about stop loss, make sure in your analysis you do what? You target where you are going to gain profit, and you also target when you are going to take you are going to lose. So you have to know all these 2 things: where you are going to take profit and where you are going to lose. Now let me go to the losing side. Now when we talk about the losing aspect, don't just go and be like, I know this chart, I know how my analysis work, or the person who gave me the analysis or give me the entries, the person is a famous trader, or then you are going to lose. So make sure your stop loss doesn't go far. Do you understand me? Make sure your stop loss doesn't go far. Take a risk, or your stop loss should just give you, shouldn't go far. Now another example is that let's say you are a tomato seller. Then you decide to go to market on market day to buy tomatoes, and your last money is $5,000. And as you go into the market, you saw tomatoes that hasn't ripe yet. Then you feel like We use all the $5,000 to buy up the tomatoes. When you bring them back home, they will not spoil because they hasn't ripe yet. By the time they will be ripening gradually, you will get customers to buy it. Then what if you buy all the tomatoes with the $5,000 on your way back home, then a car gets accident? You are going to lose all the $5,000. Or the tomatoes came home safely, then all of a sudden, the time the tomatoes were ripening, you couldn't get customers to buy it. You are going to lose all of them. They are going to perish. Do you understand me? Or decay. Do you understand me? So that's one thing about stop loss. Never extend the stop loss. Bring it at a position where you can just make a little profit so that you can use it to do what? To enter the future trade. And the third one is always aim for a risk to reward ratio. When you go to forex trading classes, you'll be hearing RR. That is what? Risk to reward ratio. Now, what this means is that, or the formula we have for this or calculating this is 1:2 or 1:3. What this means is that when you enter into a trade, make sure your target is that you are going to make ×2 of the money that you used to enter, or the fund that you used to enter, or you make ×3 of the fund that you used to enter. Don't just target a high or a huge amount of money because you trust the chart. No. Or you trust the source of the analysis. No. Make sure you just enter, or your RR, which is the reward or risk to reward ratio, is 1:2 or 1:3. Do you understand me? Don't just trade. You see, trading is all about gradual process. So if you are someone that you don't have patience, like you have you are how will I say this? You jealous. You can't do trading and go far. If you are someone you jealous, you can't do trading and go far. So it's a gradual process. So you enter into the trade and you use $1 to enter into the trade, and your RR, your ratio, your risk to reward is 2. So let's assume this trade went in successfully. So you make $2. Another example is that, let's say you risk 10 pips. You risk 10 pips. And your ratio, your RR is 1:2, which means that as soon as this pips reaches 20 pips, you are going to withdraw. Do you understand me? You are going to withdraw. Or this 10 pips reaches 30 pips, you are going to withdraw. Don't wait for the charts. That's why always you see even profitable or successful traders are always with pen and paper, because as a trader you need to be jotting things down quickly. You study the charts. You need to quickly draw your RR. This type of charts, which kind of RR am I going to give? Is it 1:2 or 1:5, 1:10, 1:20? Do you understand me? So always be with pen and paper and be jotting things down. So you enter into the trade with 10 pips, or you risk 10 pips, and your RR is 1:2. As soon as the pip reaches 20 pips, withdraw it. That's another way of what, or another way we can do risk management. The fourth one is always calculate your position sizes. Always calculate your position sizes. Now, for example, let's say your account balance is $100. Your account balance is $100, and you risk, or you enter into the trade that is 1%, which is the first risk management step that I gave you. You need to risk 1%. Now this 1% will give you what? $1 of what? $100. Now this 1%, and you target 10 pips. 10 pips. So this 10 pips and your RR is what? 1 is to what? 2. Make sure as soon as this 10 pips reaches 20 pips, it means you are going to withdraw. Do you understand me? So before you enter into the trade, make sure you have pen and paper down. Then you jot all these things down. Okay, $100 in my account. I'm going to risk just $1, which is the 1%. So when I risk $1 and my RR is 1:2 or 1:3, which means as soon as the pip reach 20 pips, I will withdraw. Okay, then when you do your calculation, it means this 20 pips over here is your stop loss. Do you understand me? This 20 pips is your what? Is your take profit. This 20 pips over here is your take profit. So when you jot all these things down, it will do what? You are going to figure out the exact place where you are going to take your what? Stop loss. Do you understand me? So let me go over again. You deposit $100. You are risking how much? $1, which is 1%. Now you are what? Risking 10 pips, and your RR is 1:2. Now your stop loss is this 1:2. If you hit profit, you are going to do what? Take 20p. So make sure you set your stop loss as soon as possible. So always choose a lot size that 20 pips will lose, or even if you lose this whole 20 pips, you are going to maintain your hot $1. Did you understand me? So you enter into the trade, you're risking 1%, which is $1, and you are risking 10 pips, and your RR is 1:2, and you are targeting 20 pips. Make sure you calculate, or you choose a lot size that even if you lose these 20 pips, you are going to what? Gain your $1, which is the 1% of the $100 back. Now the fifth one is that do not overtrade. Give yourself a limited time. Even if you are gaining profit, give yourself a limited time. Now let's assume in a trade or in a day you are executing a trade and you lose. Make sure you give yourself time. Maybe you lose thrice or you lose twice a day, or you lose or you gain 3 times a day. Did you understand me? So even if you are making profit, make sure you limit it. Go and have a rest. Go outside or go to tour. Go and have some shawarma. Take beautiful pictures. Refresh your brain and come back. If you have been learning forex trading and you want to know much about risk management, follow me and join my group from my bio. Go to my profile and click on the link and join my group. I'm going to give you free tutorials over there. So one thing that you need to know is that as a learner, if whenever you want to click buy or sell, make sure you do what? You check your stop loss, take profits, all the calculation that I've showed you, the RR, which is risk to what? To reward, and what? The 1%, and all the calculations we did over here. Take pen and paper and do the calculations before you do what? Before you enter into the trade. Even if you get the analysis from a trusted person, still take pen and paper and jot everything down. Trading is all about what? Jotting things that you have been seeing it from your mentors. You see your mentors, Coach Forex, Happy Forex, and other forex traders or successful forex traders holding pen and paper. Know that they are now learning. It's all about jotting things down. So make sure you jot things down before you enter into the trade. It will give you or open your mind. It will even make you know the thing that you are doing. Do you understand me? You have already calculated for stop loss. You have already calculated for what? It will open your mind, and then even if you lose, it will not pain you because you know that you are losing. So follow me, join the groups, subscribe to my YouTube channel, and I'm going to teach you more and more and more. Trust me, we are winning together. I love you people. Don't forget to follow me.